right? The failure of 67.3150 is key, and the recovery will be key today. If no recovery, let's see how the prior day's low and overnight low react. We must see false breakdowns or further downside below. So all eyes were on 67.3150. This was the previous all-time high level, and price broke out above it on Monday, creating new all-time high breakout structure. Therefore, range high bulls would be trapped on the failure of the low 67.3150. It failed yesterday and we started to liquidate. However, Monday's low has held, printing a false breakdown. The structure is still alive until Monday's low fails for a better pullback into macro supports. Sellers today must break down the overnight low 67.1550 and 67.0175, yesterday's low, to continue the breakdown started yesterday. Holding below 67.3150 will showcase another potential dip, at least into the overnight low, although 67.44 is also a key resistance for today, and this level did not get contested as sellers showcased continued weakness on the chart. Breaking down the overnight low and yesterday's low is confirmation of intraday selling, flipping it bearish, in which we can start to hunt macro levels of support. So if you're somebody that's looking for those macro levels and you see that 67.3150 is holding, then we can literally zoom out to the 4-hour time frame and we can prepare ourselves for the entry models to apply at the high quality macro lows of interest, right? And if we're looking at these macro low of interest, you obviously have a few options. You can look to print a Fibonacci trap at it. You can look to take a false breakdown. You can look to take a predetermined entry model. And the instrument that you use, whether it's futures, options, or premium selling, is completely up to the goals of your portfolio and your risk appetites, right? For me personally, I love to do futures, because with futures, I have a fixed risk. I can go in with a wide stop loss and I can hold that position overnight. If there is to be volatility overnight, I can manage my risk by taking a stop loss or taking a target, and I don't have to deal with the Greeks. If you're somebody that doesn't like to deal with the Greeks, you become a Greek and you sell premium, right? So that's essentially what Rich does. Especially on these great dips, you're going to get some great opportunities, regardless if you choose options or futures, right? So for me today, let's go ahead and jump into my trade plan. Let's quickly read it. 66.70.25 has merit to be contested sometime this week or even today. Yesterday's low needs to fail for us to enter a better liquidation event into better high quality macro lows of interest. Important to understand that on the failure of yesterday's low, intraday will flip more bearish, but the macro perspective will not. Therefore, I want to take advantage of those chasing short in a bullish market and buy the dip until proven otherwise. 66.70.25 failing will be the first sign that a larger dip will be taking place, in which the FOMC low 66.11 is another macro high quality low of interest. And of course, apply the entry models to set yourself up for success. Today is a very interesting day from a psychological perspective. 66.70.25 did not get filled. I did not get filled at 66.70.25, but 66.79.75. And if we quickly go back to the notes right here, we have it all written out. 66.79.75, this marks last Friday's overnight low, the higher low. The entire zone and the entire structure takes prevalence, but for me, my limit order was waiting at 66.70. So when I miss a fill like this, the very first thing that comes to my mind is obviously FOMO. But because of my experience, because of my discipline and respecting my trade plan, I cannot take a fill above my area of interest. That's just simply how I always set myself up for success. 66.70.25. If I don't get filled at that level and price action does not tag my level, then it is what it is. And even going into tomorrow, 66.70.25 has more merit, because if we are to print a false breakdown of today's RTH low, 66.78, then 66.70 can be that support to recover and create a false breakdown. So that's a little bit of foreshadowing for the evening report that I'm going to send out in an hour or two. We're going to be still hunting the macro high quality low of interest, 66.70.25. Other than that, for today's RTH session, I don't really see anything unless you longed last Friday's overnight low, like Angela, I saw her long that today. Absolutely great stuff. Great real-time read from you. And for tomorrow, we're going to see if 6670.25 gets filled. Other than that, guys, let's quickly look at Tesla. And Tesla is very interesting because yesterday I ended up picking up a hedge for Tesla specifically, and in general just my portfolio. I ended up picking up a hedge, but it's kind of ironic that Tesla is still green, and it's kind of ironic that Tesla is looking to break out and continue its breakout expansion higher. So let me just quickly drag over these broker statements. So Tesla right now, if you guys remember, Tesla was the last hot pick. Fortunately, I have not seen another hot pick since Tesla, but I've been sitting in these shares since right around here at the end of August. And right now I'm sitting at a very healthy plus 400% on those shares. So absolutely great stuff. And yesterday I wanted to hedge this position. I wanted to hedge my portfolio. So what I did as well is I picked up some futures contracts to the downside. I shorted 2 MES on futures. And what I did yesterday is I essentially said to myself, if the market is truly going to be overextended, and if we are going to start to retrace because of the news that we had yesterday, I need to hedge my portfolio. It's not necessarily a traditional setup. It's not a Fibonacci trap up here. It's definitely a false breakout, and the false breakout is definitely very clear. But for me personally, the hedge took prevalence. The hedge is what I needed to protect my Tesla position and the rest of my portfolio. So the hedge is up about 3R right now, but a hedge is a hedge. I'm going to keep this position open, and we'll see what happens. Either it gets trailed out risk-free, or the market can continue to flush lower. That's essentially it for today's ES recap. We talked about Tesla. We talked about Rich's premiums that are active. We talked about Microsoft that's going to close on Friday. Let's see the Microsoft chart very quickly. If you guys are in the stocks VIP, all of the charts are already drawn up. Microsoft is right here. So it looks good so far. It looks like those puts will be worthless by Friday, and we will see, because Microsoft does need a minus 4% dip until those puts become active, right? And a minus 4% dip in 2 days, based on the external context of the market right now, it's a little questionable, right? So that's why the win rate is always fairly good. Other than that, if you guys have any more questions, comments, concerns, you can let me know. Once again, always in the Discord, definitely make sure that you're checking out both of our live commentary sections. For me, I'm focused on the false breakdowns. I'm focused on the market structures that are dictating who's trapped and who's in control. And I will simply sit on my hands until these levels get activated. However, in real time, I'm still sending out quality false breakdowns that we talk about in the pre-market notes. So yesterday we talked about the false breakdown of Monday's low, and it worked out. And then today we unfortunately missed the fill. Such is the reality of trading sometimes. That's how it's just going to be sometimes. The low of the day is 66.78. I had my order waiting at 66.70, and we will see if we can get filled tomorrow. If you guys are confused and you need somewhere to go to for private training, private sessions, you need to understand these market structures. You need to understand how to do premium harvesting because you appreciate the weekly income that it produces. Definitely reach out to myself or Rich. You guys know his email, rich@tradingwars.com, or head over to tradingwars.com. So my game plan for tomorrow is very simple, and the SPY VIPs are going to get the homework report in a few hours. I'm looking for 66.70.25. From a structural perspective, if 66.70.25 is to break down, that's going to give a lot more merit to the intraday sellers, and the intraday trend is very likely to just conclude, because as you know, holding the 0.382 retracement, so let me just make this brighter so we can see. Holding the 0.382% retracement as significant structure, that's what we tried on Tuesday, it failed. Holding the 50% retracement at significant structure, that's what we tried today. So let's see if it's going to hold or if it's going to fail. 6,700 must recover, which was the breakdown trigger for today. And if it doesn't, I'll be hunting the false breakdown as per usual. Alrighty guys, if you have any more questions, comments, concerns, let me know. We're going to go ahead and jump into the book club for today. I'm just going to read a few pages because this book is almost finished. We are on page 193, of Best Loser Wins. And today's recap really jumps into the psychological aspect for today. Because I'm putting myself in the shoes of a younger version of myself. And if I missed the fill at 66, 70, 25, I would have been a lot more emotional than I am right now. Right. So patience is built and discipline is built through repetition. And the process is so key. When you break down your trade plan, it's very simple to follow the trade plan because your brain is in tune with whatever you wrote down. And you breaking those rules and breaking your trade plan is something that is definitely needed to be journaled because that's not what we want to do as professional traders, right? We want to follow the process, execute the edge, and simply ride the train, right? And we'll see what happens tomorrow for real-time adaptation. Alrighty, page 193. This is Best Loser Win. Now is your time to bring out the book if you have a physical copy or an online copy. So let's go ahead and jump into it. Embracing failure. Excuse me. The late Mark Douglas argued that successful trading is a question of accepting risk and thinking differently. The market wizard trader Ed Seykota put it another way. A losing trader can do little to transform himself into a winning trader. A losing trader is not going to want to transform himself. That's the kind of thing winning traders do. When I read the passage for the first time, I was not mature enough to understand its importance. When I started trading for myself, I began to appreciate its depth and wisdom. As I began trading bigger and bigger size, I realized that my journey from a low stakes trader to a high stakes trader was not the result of evolution. Sure, I got better the more I traded, but remember this, practice does not make perfect. It merely makes its permanence. Only through a dedicated approach to practice with a specific attention to finding your mistakes will you improve. Otherwise, you are just cementing your unprofitable behavior. Becoming a different person. Being anxious and fearful is a reflection of an unknown situation. Through exposure over and over, our minds come to accept the new reality, and through that exposure, become accustomed to it. You think there is a hack that will all of a sudden take you from trading $10 a point to $100 a point. You think there's some book you can read, or some course you can take, or a pill you can ingest that will take you from being an average stake trader to a high stake trader. So somebody earlier today asked me how I have so much patience to wait for these dips, right? Multiple days. Sometimes I'm not doing anything during RTH. And obviously, there's no book you can read, there's no video you can watch, and there's no pill that you can take. I 100% agree. The only thing that's going to help you is exercising good habits and not giving up and simply not running out of cash. You run out of cash in the game, you get eliminated. It's not up to you. You run out of cash, you're done, right? It is what it is. But if you have cash and you're not implementing good habits with that cash is probably going to run out eventually. It doesn't matter if it's $1 million, 10 million, 50 million, $10, $1,000. If you're not exercising good habits to make yourself better through journaling your emotions, journaling your mistakes, refining your process, your system, your edge, trading in tune with who you are as a person. If you're an aggressive person, a calm person, these things are the good habits that we need to perform every single day with a positive mindset. That's the only way that your cash is not going to go to zero. And as we know, 85% of people's cash go to zero. All right. But I am committed. I want to explore my weakness. I am reasonably attuned to my mind and body, and I know that left to my own devices, I can quickly spiral into self-destructive behavior. I had a painful breakup with a loved one, and I turned to food and alcohol. Sure, I think we all do things like that. Even Bridget Jones, I love movies, ate her way through a tub of ice cream in one sitting when she was dumped by the love of her life. But you move on. You get off the sofa, you turn off the TV, and throw the ice cream bucket in the bin. And you say, okay, so I made a mistake. I will own it. How you feel about failure will, to a very large degree, define your growth, and the trajectory of virtually every aspect of your life. You may want to close the book and think about that for a while. It is quite frightening how deep that sentence is. A significant part of your success as a trader is correlated to your relationship with failing. If you see failure as the end game, then you won't make it as a trader. I have colleagues who will stop trading if they have 3 losing trades in a row. What kind of attitude is that? You think Kobe Bryant, the absolute Superman of basketball, had that attitude? You think during a game he would make 3 misses and then ask the coach to be replaced by someone else? Kobe Bryant, the biggest failure. While we're on the topic of Kobe Bryant, I want to tell you a story about him. When I read in a paper, sadly after Kobe passed away in a tragic accident, after the accident, most obituaries focused on Bryant's amazing achievements and trophies won. But Andy Bull from The Guardian wrote about Kobe Bryant from a different vantage point. The headline of the article sums it up well. Bryant's success story began with working to conquer the fear of failure. It seems Kobe Bryant I can't pronounce that word, I'm so sorry. Knew that in order to be a great player, he needed to conquer his fear of failing. The article goes on to tell the story of a game in May 1997. It was Kobe's first session for the LA Lakers, his rookie season. He made 4 crucial errors inside 5 minutes, which some say cost his team the game. The night, the story goes, Bryant stayed up shooting hoops privately and alone. He was still at it when the sun came up. I know this feels a little sugar sweet. It has a David versus Goliath feel to it, but there is more to this than meets the eye. On the surface, it reads that Kobe Bryant was beaten in that game, and he followed it with a punishing all-night session. To me, this story tells of a man who, night after night, confronted his fear of failure by repeatedly trying. He became used to sometimes failing temporarily, and yet he kept at it. Bull concludes by saying, he missed more shots than any other player in history. Bryant was willing to encounter failure in every game he played. It is not the first story I have read about an All-American great, someone who confronted the fear of being wrong in order to be proven right. Babe Ruth, the American baseball player, held the home run records for decades. At the same time, he went by the nickname King of Strikeouts. If the term itself doesn't give it away, let me explain. A home run is great, a strikeout is the very opposite. I found the story resonated with traders all over the world who seek out systems and strategies aimed at eliminating losing streaks. As I write this on a quiet trading day on June 1st, 2020, I look over my trading statistics for the month of May. I made a total of 1,513 points, yet out of the 137 trades I executed, I lost on 66 of them, won on 53 of them, and broke even on 18 of them, where stop loss was moved to entry point. So he had 137 trades in a single month. That is absolutely insane. I guess that's why he's a high stakes trader. If I gauged my success according to some of the hyped up systems, sellers on the internet who promised a 95% or better hit rate on trades, I am an abject failure. I mean, I was less than 50-50 in May. Yet somehow, I still managed to make a decent return for the month. How do you explain that? The answer is found in the enormous belief that the more winning trades you have, the better a trader you are. That is plainly and simply wrong. One of the particular cliches in the trading world is that you can't go broke taking a profit. Oh, hell yes, you can. If you are unable to let your profits run, you will never make money trading. While basketball and trading differ on this point, if I were afraid to lose, I would never have had a profitable month. Right, so I definitely agree with that. A lot of people love to say green is green, etc., etc. But at the end of the day, risk to reward is such a prominent piece of trading because risk to reward basically puts yourself in the position of the house, right? If you want to think about trading like a casino, The point of a trader is to become the house, right? You want to have statistical advantage on your opponent, and you want to put yourself above your opponents, right? So in the casino, the house always wins. That's why risk to reward matters so much in trading. It's the exact same thing as in the casino. The house just has better risk to reward over you, literally, right? So it's just simple math and probability in the end. Statistics do not make sense. We know that 90% of traders lose. We also know from the FX trading sample of 25,000 traders that most trading accounts have more winning trades than losing trades. This does not make sense. How can we reconcile those two facts? The answer is found if you read between the lines of the story of Kobe Bryant. If you are in a losing position, you are essentially wrong. However, unlike a shot in basketball, where you immediately know when you are right or wrong, in trading there is always the hope that the trade will come back in your favor. Hope is what keeps people in trades long after they should have closed them. As the saying goes, hope dies last. So true and so detrimental to trades. How do I deal with the hope? How do I deal with hope and fear in my trading? I tend to only feel hope when I am in a trade. I hope my position will come good. I hope the market will move in my favor. Fear, however, is felt in more situations. I can feel fear when I am in a trade, but I can also feel fear when I am not in a trade. That is a subtle but important distinction between hope and fear. Just really quickly, when he says I can feel fear before I'm even in a trade, that's probably one of the biggest driving factors in unsuccessful traders. It's that inability to click buy or sell because sometimes the chart is just going to come and go and you're not going to get it back until next time. Then that can lead to a lot of FOMO in hindsight and really just eat you up, right? So that's why, again, the process is so key, right? So we don't hesitate whenever we have to press buttons. We don't hesitate, right? Because all the work is already done in the pre-market. Hope tends to be reserved for the activity of being in the trade, while fear manifests itself both when I am in a trade and when I am not in a trade. I can be fearful that the market will move ahead without me, or I can be afraid that I have closed my position too soon, which could also rightly be classified as regret. While I intend to write in much more depth about my trading regime at the end of the book, I will describe my approach briefly now. I deal with fear when I am in a trade by having an exit strategy. I have a stop loss, which defines the size of my loss. I have accepted this loss before I started the trading day. It is a part of my trading plan. That is so key, right? Only risk money that you're willing to spend. Let's reread that. I have accepted this loss before I started the trading day. If you're not willing to lose that money, then you're probably not going to double it or triple it, right? I will have mentally prepared in the morning ahead of the trading day. I will have sat quietly contemplating what I am about to do. I will have subjected my mind to images of me losing. I will have calmed my mind when it experienced these imaged losses, as to negotiate away any feelings of anxiety and regret, as well as desires to get revenge and get even. I will have dealt with hope by accepting that my stop loss will define my exits. Maybe I will win, maybe I will not win. Before the trading day started, I will have gone through mental exercises that saw me enter the markets, observe the markets move against me, negotiate with my fear brain, and the impulse urges is sent to my conscious awareness. By the start of the trading day, I will have already seen myself win and lose, add to positions, and patiently wait for the right setup. Patiently wait for the right setup. By the time the bell rings, opening the markets for trading, I am mentally warmed up. I am ready to fail without losing my composure. So every single thing that the author just wrote about is what we do in the pre-market notes and the pre-market live stream. We prepare ourselves so for whatever situation the market wants to present for today's RTH session, we already visualized it, we already planned for it, and we already prepped for it based on where we want to execute our specific edge. As you guys know, my edge is in the false breakdowns. So I've already visualized in the pre-market where I want that false breakdown to be. I've already visualized the candlesticks that need to produce, right? So I need to see 67.3150 break down to contest Monday's low. I have to see that. I already visualized it. So when it happens, I'm calm and I'm ready to execute. For today, I know that Monday's low, 67.05, and Tuesday's low, 67.0150 needs to fail. It needs to break down, and we need to contest 66.70 for me to take a fill. If that doesn't happen, there's nothing that I'm doing, right? So I've already prepared myself mentally for these situations. So when they present themselves, my brain is turned off. My brain is ready. It's good to go. It's like stretching before you hit the weights, right? We're ready and we're good to go. And from there, it's all muscle memory and it's everything that we've already done in the past, right? My competitive son. I have a fascination with reading about the lives of high-performance soldiers. I love reading about the trials and tribulations of the SAS and Navy SEALs. My son shares this interest. In particular, we are fascinated with the free diving part of the training. One of the obstacles that these elite warriors have to pass is the 50-meter underwater free dive. Do you think there is a shortcut to diving 50 meters underwater? Take it from someone who has swum 46 meters underwater. There is no shortcut. I practice and practice while on holiday with my son. There happened to a 50-meter swimming pool in the complex we were staying at. Being the competitive spirits that both my son and I are, he sat out first on our initial attempt. He made it a little less than halfway. Now I had a goal, or he set out first. Now I had a goal, and I made it almost to the halfway line. I beat him by an inch or two. We spoke about how we could get better, and we agreed that we needed to focus more on our preparation before the swim. So next we sat on the edge of the pool and we focused on filling our lungs with oxygen and oxygenating our bodies. Gradually we got better and better. Then we realized that if we swam less frantically while underwater, we would expend less oxygen. Our focus shifted to staying calm and taking rhythmic strokes. By the end of the 7-day holiday, I came within a few strokes of 50 meters. My son was a meter or two behind me. Passing this test is one of the major stumbling blocks for aspiring Navy SEALs. I'm not saying that my son or I are Navy SEAL material, but I am saying that there is no way you are going to swim 50 meters underwater without relentless practice. We worked on it, then we evaluated our process. We didn't actually focus on the outcome at all. We just did everything we could to make the process as efficient as possible. Does that remind you of something? If you have a goal that you wanted to make X amount of money a day or a certain amount of pips or points, you may be sabotaging your chances of making a lot of money. You are outcome oriented. You would benefit immensely from shifting your focus to being process oriented. So he basically just confirmed everything that we talked about. All right, let's wrap it up there. Page 200. Very, very, very good chapter. Process is everything in trading because you just got to set yourself up for success. Traders that don't set themselves up for success, they have almost a guaranteed chance to fail. And obviously, failure is not a bad thing so long as you learn from that failure. But if you're focusing on the money and you're not focusing on the process, you're not focusing on the journey, or you're focusing on the destination, then you're probably just going to fail over and over and over again, right? And I feel like for me personally, it took a few years before I actually understood that, right? Process and edge is everything, right? Kobe Bryant is not one of the best basketball players of all time if his process in the morning wasn't routinely based on practicing every single day. Obviously, execution in real time takes prevalence. Your journaling takes is very important. But those things don't exist if you don't have a process. So the process always comes first. And this is why every single day we're going to have this process sent out in the pre-market so we are attuned with price action and we can flow with price action like water in a river. So let's see what happens tomorrow. Just a very simple day. Unfortunately, 66.70.25 did not get filled, but we will see if it gets filled tomorrow or Friday. I'm still holding my head short. For now, sellers are pretty much back in the ball game until they get squeezed out the water. 67.01, 67.05 must recover. 67.19, 67.31 must recover. And then 67.44 is the final line in the sand confirmation that selling and volatility has concluded for the most part. So thank you so much for tuning in. I will see you next time. If you have any more questions, comments, concerns, you can let me know. And if you need anything, send me an email, send Rich an email, or head over to tradingwars.com. Remember, process and edge is extremely important. Every weekend, I tell you guys, do the work in the pre-market, do the work on the weekend, do the work after hours, so you're ahead of every single retail trader. And if you're ahead of every single retail trader, then you're trading like an institution. I'll see you next time. Enjoy the rest of your day and avoid the scammers.